45 is pretty much the average price ratio we've seen for the last 100 years. And that's with central bank manipulation holding down the silver and gold price, gold for Gibson's paradox, silver for the military industrial complex. We can go down that road maybe when I see you in Vancouver what I mean by that. But the point of it is that whether you take the 100-year average, whether you take the breakout of the cup and handle, I think $100 is easy. It's coming out of the ground at 7-to-1. So in terms of its geologic ratio, 44.50 divided by 7 is $635. As crazy as that sounds, I'm not saying it's going to get there, but put it in perspective when you see what Bank of America says. And they're using the gold-silver ratio as their barometer because they're saying $500.
Precious metals expert Andy Schectman argues that silver remains dramatically undervalued compared to gold. Over the past 100 years, the average gold-silver ratio has been around 45:1, even during periods of strong central bank influence on precious metals markets. Based on this historical ratio and a massive long-term cup and handle breakout in silver, Schectman believes $100 silver is easily achievable. Looking deeper, the geological mining ratio of roughly 7:1 suggests even higher theoretical valuations. With bullish gold forecasts from institutions like Bank of America, analysts believe silver could rise dramatically if the ratio normalizes. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think $100 silver is something, Keith Neumeyer made it famous years ago with his triple-digit silver shirt that he sent me for during Christmas maybe 4 or 5 years ago. And, at the time people laughed about that, but he's not too far from being off. And in fact, if you could take a technical viewpoint of it and talk about a 45-year cup and handle formation that was broken. Now, a cup and handle formation in technical analysis is one of the most bullish formations you'll ever see, especially one that's 45 years long. So at the top in 1980, you had $50. At the bottom in the early 90s, you had $4. The difference from top to bottom is $46, right? So then you get back up to 2011, $50. It's rejected. That's the top of the cup. Then the handle comes down to where we were just recently when we broke through 50 and off it goes. Now, technical analysis would say you take the top, you take the bottom, which is 50 minus 4, 46, add it to the breakout, that's $96. 45 is pretty much the average price ratio we've seen for the last 100 years. And that's with central bank manipulation holding down the silver and gold price, gold for Gibson's paradox, silver for the military industrial complex. We can go down that road maybe when I see you in Vancouver what I mean by that. But the point of it is that whether you take the 100-year average, whether you take the breakout of the cup and handle, I think $100 is easy. But, it's coming out of the ground at 7-to-1. So in terms of its geologic ratio, 44.50 divided by 7 is $635. As crazy as that sounds, I'm not saying it's going to get there. But put it in perspective when you see what Bank of America says. And they're using the gold-silver ratio as their barometer because they're saying $500 gold next year. So you take 5,000 and divide it by 45 and you get $111. Take 5,000 and, divide it by 35 where it got down to in 2011 and you're at 142. Look, all I'm saying is that we're still undervalued. There's still a long way to go by every metric, whether it be historical price averages in relationship to gold, geologic averages that go back 5,000 years, and really an asset that's never been allowed to find real price discovery. So yeah, I think we still have plenty of room to go. But Charlotte, I want it to be very clear, you don't buy the problem people made in 2021 with silver squeeze is that they bought it for the wrong reason. And I think they became disenchanted with its performance. You don't buy silver to become wealthy. You buy it because it is wealth. For 6,000 years, if you look at gold and silver cumulatively mentioned over 700 times in the Bible, it's been wealth through 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And history doesn't always repeat, but it sure as hell rhymes. And now you see the biggest money in the world, the most well-informed money in the world, whether it be the central banks, the commercial banks, the sovereign wealth funds, or now the institutional traders here in the United States that are showing you through delivery of both gold and silver, just how important it is. And silver now being critical in both the European Union and the United States, prioritized in Asia. And if you watched any of the videos I've done with Judy Shelton, two of them, where she says Trump will back the back end of the Treasury market July 4th of 2026 with gold. She's written a book about this. She's all over the place saying this. She was his nominee for the Fed in 2016 and an advisor and on his transition team. You know, you're beginning to see that gold seems to be, whether it be here in the United States, perhaps backing the long end of the bond market, or in Asia and the BRICS with a settlement vehicle to settle imbalances in trade or currency. Gold is finding a way to, I think, be reintegrated quietly into the monetary system, and silver is just being recognized as something you better damn well have or else. And that's what we see happening between very large sovereign nations, who many of which have a head start on us. So yeah, it's going to be an interesting year. And rather than pick a price, I say we live in a world of probabilities. The probability that we see silver well north of $100 to me is rather strong. Could it be as high as 200 or higher? Sure. But to say that would be a guess, and an optimistic guess. But look, if I would have told you last year that we would see silver at $80, you'd say, well, that's a pretty big statement, Andy. Yeah, sure it is. 150% gain in a year is pretty big. So rather than continue with that, I would just simply say higher than most people would actually probably think possible would be my answer.
Precious metals expert Andy Schectman believes silver could soon break the $100 level as long-term technical signals strengthen. He points to a rare 45-year cup and handle formation, one of the most bullish patterns in technical analysis. Using historical averages and the gold-silver ratio, Schectman argues silver remains significantly undervalued relative to gold. With central banks accumulating gold and global demand rising, silver's role as both industrial metal and monetary asset could drive prices far higher in the coming years. Let's get back to the interview.
China refines between 60 and 70% of all the world's unrefined silver. Much of it makes its way back out into the Western markets. Now, there's a rumor that I haven't been able to substantiate that is saying that as of the last few days, same thing is happening in Switzerland, where they need to reevaluate things and are asking the importers or all of the refineries to apply for some sort of a export license that could take between 4 and 6 weeks. And in other words, you're talking the majority of all of when China refines the doré and much of it will go to Switzerland because the bars that China puts out really don't meet Western standards. So, the Swiss refiners, and in particular Pamp Swiss, Valcambi, Argo Herreras, and Metalor will take these bars and melt them down and re-refine them into kilos and 100-ounce bars that the West wants. Well, now all of a sudden you're putting a massive delay on that because things are changing very quickly. When the massive refining engine that is China stops or mitigates or really puts a wall up against exporting out into the market, you're starting to see the reverberations. And I'll tell you this, because of tariff threats, the 100-ounce bar and the kilo bar market in this country has become incredibly scarce with really high premiums because the threat of tariffs made it so that the large importers who bring these bars in were afraid to do so. So now you put in these export restrictions and problems with the refining in Switzerland. Nothing's coming in from the Royal Canadian Mint. They make 100-ounce bars because of the tariffs. And all of a sudden you have a market that is really, really short on investment grade bars in North America, and it's getting worse. And this is without very little mainstream participation at all. I think it's something to certainly be concerned about if you're looking for 100-ounce bars, or if you're running a company like mine. It's becoming very difficult to find what is normally the easiest product to get. That is a rumor, and who knows what happens to the quality of these solar panels. As silver, it has the highest level of conductivity for not only reflection, but also for heat. And I think they are looking to do that. And, if it goes the other way and the price goes way down and they were able to continue to use it, it would just mean that they would sell more solar panels. The more efficient that you are with price, the greater the volume. You could give solar panels to everyone. So it's an effect of the realization that silver is becoming critical on many levels, and not just in photovoltaic. It goes well into, AI and digital and electronic and military applications, not to mention monetary. So yes, there is that rumor. But to me, it doesn't really amount to too much. It's just, I guess, a indication of much higher prices, and maybe they believe that prices are going to go much higher, and they better figure out a stopgap to be able to continue to produce them. I've been talking about that for well over a year, Charlotte. Sean Kuhn, who I'm sure you know, the CEO of Dolly Varden, has told me a long time ago, and I've been reporting it for at least a year, that, everyone's fixated on Samsung going to Mexico to open up a mine that was closed to take all of their doré and concentrate for 2 years. Okay, fine. But Sean said to me well over a year ago, in fact, it was at dinner, I believe, at the Vancouver Resource Investment Conference, which is about a year from next week. And he said, or a year behind last week, you know what I'm getting at. Anyways, he said, yeah, China has been coming for at least a year to Mexico and Peru in particular. Now, Mexico's number 1, China's number 2, Peru's number 3 in production, but they've been going directly to the miners, disintermediating the marketplace, buying doré and concentrate. Doré are the bars that the miners will crudely refine, and I don't know to what percentage, but nowhere near full refining. And concentrate is a byproduct sludge of the mining process. They will pay double what the West will, disintermediate the market, ship it back to China, and refine it themselves. Now, this is the number 2 producer in the world, going to great lengths, flying to, South and Central America to do this, and to Mexico, building a deep water port in Peru, doing all of these things to be able to do this. And they're already the second largest producer. So this has been going on for a while. And I think it goes to show, if it's that important for China to buy silver in a pre-production, pre-refining stage, sending it all the way back and refining it in order to disintermediate the marketplace, I think it tells a signal just how valuable it is. And certainly, in my opinion, far more valuable than the dollars used to purchase it. So yeah, all of these pieces put together are far more important than looking at them individually. What you have is the second largest producer of silver in the world, who is basically saying that this is not a metal that is properly valued, that in order to have an advanced society, one that is electronic and digital and AI and strong military and all of these things, that it's an asset that you need. And as we've documented for a long time, it's depleting. This will be the 6th year in a row of structural deficits of between 1 and 200 million ounces, if not more. And of the 800 plus million ounces mined, again, this last year, less than 200 million came from companies like Sean's that primarily mine silver. It's byproduct mining of copper, lead, and zinc, where the majority of the silver is coming from. So it's becoming harder and harder and harder to find it in large deposits. So it's no wonder that China is going to such great lengths. Samsung caught the headlines, which has been verified and validated a couple weeks ago, negotiating with a silver mine in China themselves. But yes, put it all together with being reclassified critical, export bans, and you can begin to see where this is leading if you take an objective assessment of it.
China's growing control over the global silver supply is raising concerns across Western markets. The country refines nearly 60-70% of the world's raw silver and has increasingly sourced doré and concentrates directly from miners in countries like Mexico and Peru. At the same time, major Swiss refiners such as Pamp Suisse and Valcambi are reportedly facing export delays. Combined with rising industrial demand from AI, solar, and military sectors, tightening supply could drive significant volatility in the global silver market. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.